This is the exact feeling of riding the teacups after the corkscrew roller coaster. Welcome back, mindful investors. In this video, I'm going to talk about my 100x problem. What is it, and why some of you may eventually experience the same problem? Let's get to it. Earlier this year, from mid-February to around the third week of March, I've experienced a 100x treatment. Here's a backstory some of you may know. In mid-February, the S&P 500 peaked at around 340. And then it tanked right down to around 240 within this 6-week time frame. And at the same time, I had a whole bunch of VIX call options, which means the fear index. At the same time, mid-February, the fear index right here was around 15, and it peaked at 85 within the 6-week time frame. So my initial call contracts around this area was maybe worth, like, let's say $1. It peaked at close to 100. I made a video back in March documenting every single one of my trades, and you can check it out right here if you like. So what happened exactly? Every single week, the S&P dropped like 10% here, 10% here, and 10% more right here. Ultimately, it dropped like 33% in 6 weeks. So within this 6-week time frame, we see that this VIX has gone up like a rocket ship, pretty much like a straight line, like this. Straight line rocket ship. If your call contract started off at $1, and every single week it doubled or tripled. So first week, let's say it doubled, second week maybe 2.5 times, third week twice again, fourth week it went a little bit slower, maybe 1.5 times, fifth week it tripled, and the sixth week was the ultimate kill. It went for the double, maybe like a 2.1, and then there was the 100x. This 33% drop for S&P over like a 6-week time frame was probably like the steepest ever. And I experienced that on the positive side. Even though my long positions were getting crushed, I didn't plan to sell it at all. But my hedging position on my long VIX was going up like a rocket to 100x. While that was the ultimate corkscrew rush, now let's look at the teacups. As some of you may have seen in my previous videos, I shorted the NIO stock and the vaccine stocks. Let's see how they performed. If we look at my long put NIO position right here, long put February 19th, 2021, $35 puts. Right now is at a loss of $743. That's about a quarter of my position. My total position here is 3.1k. Right now is worth 2.38k. That's not even the issue. If we look a little bit deeper here, we see that this position has gone up to a peak of $5 twice. So for my $3.12 cost basis, it's gone up more than 50% at 2 different occasions. Similarly, let's take a look at Pfizer. Right now, the position is up $5.95. My cost basis is at 2.8, and right now is at 3.4, so it's up about 20%. But if we look a little bit deeper, we see that this position has gone up to a peak of 1.73 in 2 different occasions as well. So 1.73, again, is more than 50% from my cost basis of $1.12. So both of these examples can perfectly display my 100x problem. One of them, the NIO, is already in the red. The other one is hanging on by a thread. But at one time, these positions were up 50%. For Pfizer, it was only a 1-week play. If we look at any traditional investment, 50% in 1 week is unheard of. So why didn't I sell? After seeing this 100x potential, these 50% gains means nothing to me. And that's the real problem. What's my mindset behind that? Is that I made the play for the 3x to 5x gains. Anything less would be considered a failure. And losing 100% on these plays won't fade me from making further plays. I definitely think there's an issue here, is that not all plays can go for the 10x, 5x, 20x or 100x. This 100x incident may only happen once in a lifetime. So if my anchor point is up here, then all these other plays would be failures. I would be holding on to it for way too long and turning all these profits into losses. If I step back and think about it a little more, what if I was a blank slate? That I'm completely new to this options game, and I haven't experienced these 100x, 10x, whatever gains. Wouldn't I be happy to pocket the 50% and move on to the next play and maybe make another 30%, cut it, and the next play? I'm not sure. And I've probably done that in my early stages in this options game. But now that I've seen the rocket ship, it's hard to play the teacups. I think in my mind, these long option plays are either zeros or heroes, and nothing in between. That's the real issue here. And a large part of why I think this way is the FOMO, is the fear of missing out. Let's say I sold Pfizer at the 50% gains. What if my whole storyline played out as I stated in this video? The storyline that the vaccine doesn't really work, or there are major side effects causing them to pull the vaccine off the shelves. What if that happened and these options went 10x and I sold at 50%? That's the fear of missing out. What if, right? What if this happened, then what? I'm really not sure if there's a lesson in this video, but it's just the problem I'm experiencing right now. If I ever come across with a solution, I'll update you guys. Alright, hit the like and subscribe buttons if you found any value in the video. Thanks again for watching, take care, and I'll see you in the next one.